So welcome everybody to another Friday, and we are excited to have George Carlozzi with us today, and he's going to be talking to us about Physicians Mutual. And just as can people jump in or raise their hand whenever they want to, or do you want them to wait until the end, or how do you prefer questions to be asked?
Yeah, thank you for asking. My kids would not believe I'm going to invite you to just jump in and cut me off. If Doug, if you or Nancy or somebody would be so kind to keep an eye on the chat, for whatever reason, I would not be able to keep up with that. So if somebody chats a question, that would be great. But yeah, just go ahead and jump in.
I can do that, and I'm sure Nancy will too. So
thank you.
Okay, so George, take it away.
Well, thank you very much, Doug, and everyone. Nice to virtually meet you. I love the world of high tech. I'm a broker relationship manager with Physicians Mutual. I'm going to go through a slide deck here, and please don't hang up when I say slide deck. We'll do a presentation here that I hope will be informative. We're happy to have the opportunity to pursue doing business together and trust that we're a good fit. I'm going to head for a screen share. Okay, not the WebEx I'm familiar with. So
do you see that square with the up arrow in it?
So when I mouse over and it says present now?
Yes. Now, when it gives you a choice, there's some tabs along the top, full desktop. You have to choose the right one. And then you have to definitely select something in order for, if that makes sense.
It does, and I think I haven't gotten ahead of you. Can you guys see the beginning of the slide deck?
Yes, we do.
All right, perfect. All right, unfortunately, this platform does not allow me to see any of the videos. So now I'm talking to my screen, but I trust you guys can see me on your screen.
Yes.
All right, thank you for your help. I'm just going to slide the bottom.
You can hit that. You can hit the hide button on that little.
Indeed, and there I have. I'm going to grab a laser pointer and jump right in. All right, guys. So welcome to Physicians Mutual presentation here. We do have great insurance solutions for your clients, to include Plan F and Plan G, a high deductible F and G. And then this thing called the innovative F and G, some folks may be familiar with, but we'll spend a little bit of time unpacking that one for sure. And welcome. I appreciate the opportunity to have our conversation. We'll talk about Physicians Mutual in a second, but hey, who is Mr. George, right? Where'd this guy come from? So I'm a dad, I'm a husband, I'm a granddad. I love vintage Lincolns. For anybody that loves those classic Lincolns, and yes, that is my version up here of Disney's Kiss the Girl. It is the same girl that I am with today. So I'm a real person with pets and grandkids. And some days you just have to create your own sunshine. All right, enough about me, unless you have an hour. Let's just instead talk about Physicians Mutual. Alrighty. Physicians Mutual, been around since 1902. Just had our birthday the day after Valentine's Day. And we used to sell just to doctors and dentists, hence the name Physicians Mutual. And we've been providing Medicare supplement insurance since Medicare's inception back in 1965. Been around a long time. We've just been held in captivity for half a century. And we broke out of captivity about 2 years ago. And we're inviting folks across the country to do business with us instead of just our captive agents. Hopefully you have heard of these two business ratings company. Both the A&M Best and the Weiss Ratings companies find us and our subsidiaries to be excellent. But more importantly, these guys find us to be excellent. We have a coveted very high percent customer satisfaction, due in part to our U.S.-based customer support. Our home office is in Omaha, Nebraska. We have never and have no plans ever to offshore our customer support. And we get that measured every couple of years. And we protect that thing like it's our firstborn. Here's a glimpse at our product portfolio. And depending on contract type and licensing and so on, You guys have things available to you. The things we're talking about today, all of them are available. We're leading into the new phase of independent agent model with our two bestsellers, our Medicare supplement and our dental insurance. We'll glance off of these other two at the end. And we do have pet insurance. We've started rolling out at the home office. We can talk about if anybody has a real strong interest. We're not going to go over that today, but know that we have it. And it is something that you can get a spiff on if you send pet insurance our way. This is a product availability map of everything that we have available currently appointed in the United States. And these color-coded Tic Tacs will show you, for example, these three colors are the med sups. These are the dental products available. You'll see that the four states that I was invited to talk about today all have the new dental. Idaho, unfortunately, not yet appointed with their med sup, but these other states are, and they do all have the four-plan dental we'll talk about at the end. And other products are available, specified disease, cancer, which has cardiac riders, and modified whole life. We're looking at developing our life book in the coming years. But right now, the center of the mark for us is our Medicare supplement. Those are the four states that we're going to be talking about. And there will always be more that we could talk about. I'll hopefully offer you enough of an overview to pique your interest, and then anything beyond we can talk about offline in each of the specific states. But let me call your attention while we're here. This red dot in these three states represent the one particular Medicare supplement product, and you'll note that Arizona has the new product, this black Tic Tac instead of the red one. We'll be calling that out in subsequent slides here. What does that mean? But just know that these three states have the current book, and these guys have the new book. All right. Let's talk about what makes physicians different. We've already glanced off of the 95% customer satisfaction rating, and we'll unpack these as we go. We have an exclusive 2-year selection guarantee. We do some age banding. We have 2 levels of underwriting, dual rate structure, which varies state by state. Some folks are familiar with it, some not, but they are the attained age and the issue age. And we have a patented Medicare supplement plan. That's the innovative plan that I mentioned initially. We'll spend some time there. And then the unlimited preventive care benefits. I want to say, the unlimited preventive care benefits, that is the center of the mark for us as a carrier that sets us apart in the marketplace. And we'll certainly be talking about that as we go.
So George, could you explain the exclusive 2-year selection guarantee? What does that mean?
Perfect. That's a great segue to my next slide. Thank you for asking.
Oh, okay.
Don't hold back. Here we go. So the 2-year selection guarantee means that within the first 2 years of owning our policy, your customer can switch to any other plan within the portfolio, up or down in coverage, without any underwriting. And that's available the first-time enrollees with Physicians Mutual. Whether they're coming to us as open enrollment or they're coming to us as T65, doesn't matter. If they're having their first policy experience with us, then they can switch up or down. Now, people will ask me, excuse me, I just noticed that my laptop is not plugged in. I'm going to hurry and do that, but keep talking as I go. So the microphone's going to sound like I walked away because I did.
You just look like you're magic. That's it. That's magic.
Oh, well, you know, I didn't want to confess that hobby on our first meeting, but but this disappearing and reappearing is one of my specialties. Okay, 2-year selection guarantee. It is what it sounds like. So somebody, let's say they start out with a full-blown Plan G, they have a windfall or some other reason. They say, you know, I really don't want to keep on paying this full-blown Plan G premium. Let me just drop down to a high deductible plan. Now we can all kind of get our heads around that. Most carriers are not going to quibble with you. We're going to say, sure, you can downgrade downgrade to a lower product, no problem. But what about a guy that has a high deductible plan, kind of has the financial horsepower to stay there for the foreseeable future, then all of a sudden gets a catastrophic diagnosis, needs the money to go toward direct costs, not max out of pocket. out-of-pocket costs, deductibles, what have you. Can that guy really upgrade to a full-blown Plan G within 2 years without any underwriting? And that's exactly what we're talking about here.
Okay.
That is a very unique to us in the industry. We're not aware of another company that offers a 2-year selection guarantee like that. I mean, there is no underwriting. And although I wasn't in the meeting many years ago when they built this plan, I'm thinking, because we've got over a century of claims experience and actuarial table, we know where we can take this risk. And I just think it's a great comfort to seniors who are thinking, well, I don't want to make a mistake. I kind of want to go with this company, but I don't know which plan I really want. This will kind of remove some of that pressure from them.
So George,
go ahead.
If I were an agent and I were listening to you, the first thing that I would think in my mind is, okay, I know a lot of Medicare supplement companies who make quite a distinction in the compensation between underwritten and guarantee issue. And I would wonder if that same distinction applies here, or if this 2-year selection guarantee suggests that you have compensation that is quite similar across the guarantee and the underwritten plans.
Let me answer your question this way, and see if I don't answer your question. I think I understand your question. So if someone starts out, okay, let me gather my thoughts here. So when our commissions to first-time enrollee for open enrollment, for example, is going to be one level of, it's going to pay whatever the commissions are to an annualized new business premium. And forgive me, I don't have your specific state percents in front of me right now. Okay. And if it's underwritten business, that's going to go up a little bit because of the annualized premium. If someone were to go to a upgrade from a high deductible plan to a Plan G, that would be an internal replacement. So depending on the state, then that would be the then current commissions going forward on that policy.
Okay. But it's always a reflection of the annual premium is basically the compensation.
Correct. Okay. Correct. All right.
Someone is Dan, you just raised your hand.
Yeah, so a question, if say a client enrolls in a Medicare supplement plan and later on goes to a different plan with a different carrier, and then let's say a year or two or even longer comes back to a supplemental plan with Physicians Mutual, does this rule take effect again, where they're re-enrolling? It's new policy, or is this just only a one-time thing, no matter if they leave and come back?
Yeah, that's a fair question. So the 2-year selection guarantee is available to the first-time enrollees with Physicians Mutual. So no, it would not reset the 2-year selection guarantee if they were to return, because they would not be a first-time enrollee with us.
Okay, thank you.
You're welcome. All right, we do age banding and have underage product available. Our age banding is for ages between 65 and 68. They receive the price of a 65-year-old, and we don't take our first age rate increase, until age 69. But of course, medical inflation still applies during the age band period. And for folks on the call that may not be familiar, every policy, every company, every year is almost guaranteed to have a rate increase. And that's made up of 2 factors. It's going to be medical inflation, because things cost more every year, and it's going to be age inflation, because folks get 1 year older. Well, we freeze one of those for the first 3 years, and we don't take the first age rate increase until age 69. Although through those first 3 years, medical inflation still applies.
So George, let me just ask, you just said something that sort of surprised me, which is that you have underage. Do you have underage Medicare supplements in in just some states, or in all the states that you have Medicare supplement coverage in, or how does that work?
So that has never come up. Let me look that up and get back to you.
Okay.
I have not found a state where we have not had that, but I don't want to make an assumption and say, oh, Doug, we have them everywhere.
Also, are those able to be written by the agents, or are they only written by the company, and are they commissionable?
Great questions, all. They are able to be written by field agents, and we commission them on the basis of age 65. Folks that are familiar with the underage product know that those premiums are going to be pretty hefty for the poor folks that need that coverage. But we're gonna treat the commissions as if we brought them in at age 65. And then when they turn 65, I had an agent once say, well, then they get to pass through the Golden Gateway one more time, right? They're T65, and then they're subject to the new rules for turning 65, and we'll re-rate the policy at the then current rate.
Okay.
All righty, great questions. Thank you. Let's talk about our underwriting. I mean, we like it a lot. And when you look at our monthly bonus, for example, we have a standing monthly bonus as a company where with 5 med subs minimum, now guaranteed issue and internal replacements don't qualify, but open enrollment for sure and underwritten for really sure is available for this bonus, a minimum of 5. And for every open enrollment, I beg your pardon, for every open enrollment, it's $50 a med sub. And if it's an underwritten policy, it's $200 a med sub. And I do some training for my team, how to go after that business. It really is low hanging fruit because it's the only product that you lead by price. So that one's kind of easy, but we'll save that conversation for another day. As we're coming out of the gate here, just know that we have 2 levels, limited underwriting, age 65 to 68. Those are folks who've, they're past that 6-month window. They're coming to us. They are going to be subject to underwriting. And then we have full-blown underwriting for age 69 and above. Both levels have only a 2-year look back. And in many ways, we're industry predictable in our underwriting rate, oxygen dependency, insulin dependency, those kinds of things. We can help you understand the specifics as we go along. But we are surprisingly generous in other ways. For example, a person can have both diabetes and high blood pressure and be on 2 meds for each, other things being equal and considered. And they can still possibly qualify for a policy with us, as long as there's been no med chains, yada, yada. So as I said, in some ways, we're pretty industry predictable. In other ways, we're surprisingly generous with our underwriting. And we're always looking for ways, to accept reasonable risk, going forward, because we want to grow the business, but we're owned by the policyholders. So our first obligation, of course, is to them. But I remember a couple of times sitting in meetings, with the underwriting folks, and they said, oh, we're known as the no department in the industry. But really, we're looking for ways to accept reasonable risk. We're an insurance company, right? And one of the ways that we as a company found that we could improve our ability to say yes to more policies was by implementing the IRIX system last year, where we ran parallel systems with this third-party underwriting software with our then current process. And we found that we were able to issue something on the order of 11% more. And we greenlighted stuff. And why are we spending the time doing the drill down and being real protective of things where we could really be more generous and allow the field agents to write more business? And we're able to start jet issuing even underwritten business. And when you talk about our full underwriting, again, 2-year look back for 69 and older, we are very competitive in that market. If you want to run some scenarios in whatever software you're using, CSG, or go to our website and run some quotes, you'd be surprised at our premiums. Let's talk about those plans. Give you a half a second to take this in. We've got the Plan G, pretty typical stuff. It is what you think it is. We'll look at that in a second. We've got the high deductible G and F. And that is pretty much what you think it is. It has the CMS defined max out of pocket and the high deductible. And we have base plus rider. That's how we build the Plan F these days. Otherwise, we don't take a base policy and start bolting on riders to get to a Plan G. It's a very comprehensive premium plan. It's a benefits rich policy. And so again, we used to build our insurance policies with a base plan, bolt on riders. We do the F plans like that now. But our Plan Gs are pretty comprehensive. And they include, things like, basic Medicare supplement benefits, the Part A deductible, the Part B excess charges, foreign travel at 80%, and additional home care. Of course, plans vary by state. I've got to say that.
Can I look question on
Sure.
the on the excuse me, on the F, the base plus riders? Actually, I see that you already answered the question in the writing there. Never mind. The base plus riders, I'm still having a little difficulty. So riders refer to what? Dental coverage, or what does that refer to?
So that would, the dental would be a separate policy with us, by the way. So what we mean here are things like, the Part A deductible for, the inpatient hospital stay, things like, Part B excess charges, also the blood deductible, cover the first 3 pints.
So this is almost the way they build Medicare supplements in Wisconsin or something like that, right? So that's what they're doing here. They're doing it the way you do it there in the Northwest.
Yes and maybe. So no, fair point. But you're getting the idea of how companies do build policies, and we used to just build them like that. We'd have a skeleton of a base plan, and we'd add these riders to it. And for the Plan Fs right now, we are still doing that. Although plans vary state by state, when you look at the Plan G, or in Wisconsin, we call them the comprehensive plan, right? That plan has everything baked into it, right? It's got that blood deductible, it's got that foreign travel, it's got that Part A hospital, Part B excess charge, all that stuff. That's all baked into it. So does that help?
Sort of.
Okay.
I think I understand.
Okay.
So I have a question. So those that that wanted a Plan F that can no longer get the Plan F, basically what you've done is they essentially can get a Plan F with the rider now because they have to go Plan G, right? If it's after 2020. So they can add that base rider and essentially have like a Plan F. It looks like a Plan F, basically. It mirrors it.
I was tracking with you on everything except they have to get a Plan G. Nobody has to, but you're making the. Go ahead.
Yeah. Well, the Plan F is no longer offered as of January. So those that want like the most comprehensive supplement would go Plan G. But let's say, because they've heard Plan F, and they're like, I really want Plan F. And I'm like, well, you turned 65 after 2020. We can do Plan G. So they can add the base rider on this one. And essentially, it's kind of like having a Plan F.
I understand your question. So we have, you're correct when you say everybody who becomes eligible for Medicare after January 1, 2020, they're just, the only thing available to them is a Plan G or high deductible G, right? You're right. Why do we have a Plan F? Well, we build that for maybe underwritten business, people who were available for Medicare prior to January 1, 2020, and they're shopping around and they want to pick up the plan. They're like, I kind of still want that Part B deductible covered, which is really the only difference, right? The main difference between the two plans in general. And so all I'm illustrating here is that's how we get to a Plan F, is it's a base plan and we build it with riders. By contrast, our Plan G stuff isn't built like that. They're pretty comprehensive. They're premier plans, and they include all that stuff, respecting plans vary state by state. Does that help?
Yeah. So can you add the base rider on in any state, or is it state specific?
So the Plan F Anywhere is built this way. Well, I shouldn't say that. I can think of states that require different constructs. That's a fair question. I think the answer is if they're eligible for a G, our Gs look like this. If they're eligible for an F, now that'll be an underwritten policy. We build it like that, and it's built with riders on top of a base plan.
Okay.
Yeah,
All right.
plans. Yeah, no, fair question. I just think, I'm thinking of a couple of different states that require us to do things one way. Some of them insist that we're issue age comprehensive, yada, yada.
Yeah.
But yeah, I think really the point that I appreciate your question. It gives me the opportunity to point out that, in most states, I think that's fair to say, in most states, given the benefits richness of our plans, it is in part due to the fact that we don't construct them with a base with riders bolted on. They are pretty comprehensive the way we build them, and so that plus the competitive rates, et cetera, that makes it a great leading product. So enough said.
Okay.
Cool. Yeah. Thank you. Yeah. Thanks for the question, though. This innovative plan. What is this thing in the middle here? Well, it is a patented plan unique to Physicians Mutual. Let me end with that, because the next slide, that's going to take us into the next slide better. So let's talk about this bottom part for a second. All of our plans, Utah, Nevada, Colorado, they do include our preventive benefits. No dollar limit. Wow, what does that mean? Well, we pay for preventive care like nobody else. For example, we pay for annual physicals, which we know that Medicare does not pay for. That is not the same as the annual check-in, or the consult when they first go on to Medicare. I'm talking the stem to stern physical that everybody got for 45 years in their working years. We're gonna cover that at 100% with no balance billing. Also, if there is a preventive test that Medicare offers, let's say aortic aneurysm, they're going to offer that once in a lifetime. Well, we're going to cover that if the doc finds it medically necessary and it's coded preventive. We're not telling anybody how to practice medicine. We're not telling anybody to go tell the doc how to code stuff. We're just saying that if in the normal practice of caring for you, your doctor says, hey, I find this medically necessary, I want you to have that off-cycle colonoscopy. Medicare is not going to pay for that. We all know that, but we will, so long as it's coded preventive. There's other things we'll get to in subsequent slides, but for me, before I became a broker relationship manager for the company, I was an agent for the company, and the uniqueness of our plans, the benefit richness of our plans were really the thing that I needed to see, right? I've been in business for many years. I have done plenty. I needed a healthy company with great corporate culture, and we can chat about that over coffee. And I also needed a company that had very unique and great plans. And this company hit both bells for me, and that's why I'm here and took the promotion a couple of years ago to be a broker manager, because I could get behind it and share with other agents and say, hey, it does this. And when you look at the preventive benefits that we offer, in subsequent slides, again, it'll blow you over, the things that we pay for that the other guys aren't. Okay. Well, that's the teaser. We'll get to the slides in a moment. In Arizona, remember that they had that black Tic Tac? So they have the new book of business, which if they pick up the preventive benefits rider, which in this particular plan construct, the unlimited preventive care is a rider in that state. It includes access to the Sober and Fit program, which we'll be talking about in a couple of slides. So in other words, we're looking at the states where you guys are in, right? You've got Nevada, Utah, Colorado. They had the red Tic Tac. Those plans are the current book of business that has the preventive benefit baked in, right? It's part of the policy. They have the unlimited, uncapped preventive care. No dollar limit, no kidding. As we're bringing out the new plan across the country, we have a way to put Sober and Fit into those plans, because a lot of people just didn't care about it. Everybody wants it, but no, not everybody really wants it, right? It's okay. It's a $10 rider. Okay. So, but again, plans vary state by state. but this enhanced preventive care is really the tip of the spear for us. Okay. And it is available in all these plans, right? In the current states that the red tic tac states that we were looking at a minute ago. That's the Plan G. The Plan G has it, right? The Plan F has it. The high deductible GNF has it. The innovative plan has it. It's an amazing benefits rich product that this is the tip of the spear. Okay. What is this innovative plan? This is a plan that, in a word, acts like a high deductible plan for 3 calendar years, and then it naturally converts to a full-blown Plan G. We got a couple of slides to talk about it. Stay with me. It is an amazing, amazing insurance policy, right? The coverage includes the basic Medicare stuff, the Part A deductible, the Part B excess charges, foreign travel, additional home care. It is a Plan G or F that happens to have an innovative rider. That's the way the insurance commissioners require us to build the plan. Just know that it starts out a high deductible for a couple of years, then rolls over naturally to a Plan G. Let's talk about that plan. Okay, we talked about the 2-year selection guarantee, and we talked about the preventive care. I guess I did leave this slide in, right? And it fills in the gaps like we discussed a moment ago. There is no dollar limit on the amount of benefits they can receive. It's defined as an innovative benefit under the Medicare regulations. Most carriers do not go beyond any mandated benefit, and no other carrier offers this level of preventive care. Let's look at the innovative plan. Temporary high deductible with a discounted comprehensive rate for life. Those are the numbers you see below. The preventive benefits are obviously not subject to the deductible, and the rates may be one of the lowest for plans that include optional riders. There is a long-term ownership reward with full benefits at a lower price. If, for example, in the state of Utah, you had a guy and his buddy picked up a Plan G, and the other guy bought the Innovative G, the guy with the Innovative G has a 22% discount for life, because the plans start out right now at 22% discount with the innovative plan. Nevada has a 21% discount. Colorado is sitting at a 21% discount. Also, Arizona, 28% discount between the innovative G and the full-blown G. All they've got to do is carry that high deductible / max out of pocket for a couple of years. Somebody probably thinking, what's their chance of hitting that deductible? We will get to that. And again, jump in with any questions. Again, the high deductible G is what we think it is. It's got the Part A hospital. Obviously, it's got the Part B because it's a G. There's 20% copays. This max out of pocket is defined by Medicare. It's not our number, it's their number. And by contrast, the Plan G has no copays. It has no Part A. There are no Part B copays. There is no max out of pocket. And this plan, as I said a moment ago, acts like one of these for 3 years and then becomes one of these that look like this. 3 years later, the plan naturally converts. What 3 years, right? And obviously, because it's a G, we're going to keep that Part B annual deductible. We can't do anything about that. It's a Plan G. The rest of this year, plus 2 full years, if somebody picked up a policy with us tomorrow, they would have the first 3 months, almost 4 months of 2024 covered as part of the 3 years, because it is a calendar year, not a 36-month period. So on January 1st of 2027, this plan naturally converts to a full-blown G. Any questions about that unusual and cool product?
Yeah, so as I'm as I'm listening to you here, I'm going, okay, they must have really seen some, in the big data, they must have really seen an opportunity here.
Mm-hmm.
And so I don't have the numbers in front of me, but I think it's a pretty cool thing, because okay, so the people are going to get into this when they're 65 to 68.
Mm-hmm.
they're relatively speaking, that's when they're going to be healthiest of all, and they're going to pay in the 2,800 if they have a health thing going into it. Yes, it's I'm impressed. It is a pretty cool plan.
Yeah, thank you. Yeah, it is. Thank you very much. Sorry.
I'm a little surprised that you didn't extend it out, say, to 5 years, right? But that's I mean,
Yeah, well, it's interesting. Yeah, this plan, and it's a different conversation. Let's just kind of pull over for a minute, have a cup of coffee. It's if you're taking a customer, right, as I'm selling, right, I'll take Mr. and Mrs. Jones through the education part of how Medicare works. Most agents are doing that. We're not trying to sell as we're helping them understand the challenge. We teach to this, almost everybody does. And then, we take off the teacher hat and we put on the salesman hat. And I playfully do that when I'm with a customer. I say, I'm not even going to talk about our products for the first 15, 20 minutes. You need to get your arms around this thing called Medicare. If you don't buy from me, great. It's okay. It's not going to be because you don't understand how Medicare works. And it's not going to be because you don't understand Physicians Mutual products, because we do have a cool, weird one. It's going to be because it's not for you. And I can live with that because I'm a neighbor before I'm an insurance guy. But to position this in front of somebody with its benefits richness, and we've only started talking about the benefits, it's a slightly different conversation because this is a very cool plan. And when you look at like this next slide, and forgive me for giving anybody whiplash, we've actually been selling it since 2008. The Board of Insurance Commissioners required us to road test this for about, what year did we roll it out? We rolled it out in 2013, right? So they made us put this thing out there for 6-7 years in several states before we could even roll it out across the country. They wanted us to prove to them that this wasn't just a market grab. There was true market value. There was true long-term benefit to the consumer. And they liked it. And we like it. Well, why? Well, among the many reasons is there's a 97% persistency of this plan on our books, which of course means it's 97% persistent on your books. This is an amazing product. And as we discussed a moment ago, you have lower premium costs for life, because when we do our rate increases, we don't discriminate among the plans, right? We hit all 3 plans, right? The high deductible, the G, and the innovative G. So the guy that starts out 21, 24, whatever percent less, he's going to keep that for life. In fact, I was selling to somebody back in November, and I've never had a high deductible plan in my life. I don't know that I want to start one now. I said, Lori, work with me. I'm trying to downsell you. I'll be happy to sell you the comprehensive plan. I'm trying to save you about 24% for the rest of your life. And when I showed her, I'm sorry, we're just pinging now. Let me go to the lower right corner. When I showed her that for our company-wide claims experience, I said, Laura, you have less than a 5% chance of hitting that deductible in year 1. In year 2 or 3, you have less than an 11% chance of hitting. In any of the 3 years, you have an 80% chance of not hitting it. And if you do, here are the numbers, right? $518 a year. What is that? 2-3 months premium? And you have an 80% chance of not even hitting that. This is an amazing product. So after a couple of attempts, you'll be proud of me. I was able to sell her the lesser plan, and I knew that they were close to kind of getting their arms around it. It's not your high deductible like our group plans, right? Like nothing works until you meet your deductible. No, that thing doubles as a max out of pocket. See, we know that in the industry. They don't know that as consumers doing this. Go ahead.
So George, here's what so tell me if I'm correct here. The only people who are going to know this are people who are appointed and who have gone through training like this, because this stuff does not show up in the CSG actuarial quote engine or anything like that. You have to be a physician mutual agent. You have to know the program in order to be able to explain it to somebody, and that's kind of how it is, right? I mean, there's a definite advantage to being an agent here and knowing the program versus it's just an AARP Medicare supplement that everybody knows. And
no, that's very well said. So yes and yes. So I have a CSG account, right? I can go into CSG and quote anybody, any zip code, and I will see, Plan G is a Plan G is a Plan G, right? Everybody thinks so. Well, then I scroll down to Physicians Mutual and I see this thing that the actuaries are calling, they don't call it an innovative plan, they call it a hybrid. And I looked, what's this hybrid thing? Well, it's cheaper. Well, I don't know what that is. I scroll past it, right? A G is a G is a G. Well, no, but unless we have this conversation, you're absolutely right. And, to help people understand how to position, it really is caring for the customer, because this is an amazing benefit that if they just understood it, like Lori and Bob, from a few months ago, you're not going to see this data on CSG. What are the chances of them hitting that deductible?
Yeah.
And then, by the way, as a sidebar, you didn't ask, but how do we structure our onboarding? And I tell people all the time, well, I hope you like me because you get me. Because if I'm doing the invitation and the onboarding, you'll get my cell phone number. And if you're customer facing and you need something, text me, right? I mean, let's deal with it. But I'm also available for the training to help people know how to have this conversation, because it is unique. And it's a slightly different conversation. We're just going to default to a G by price, right? Because we're all consumers. We want to help people save money. I get that. Okay. Thank you for your question. So when you look at the effective date, we glanced off of this a moment ago, but favorite true story of mine, I sold a lady a policy on December 22nd. I should put this in the slide, although the compliance guys would kill me. I sold a lady an innovative G, right, on December 22nd. She got full credit for all of 2022. And she only had 2 years and 2 weeks, right, to meet that third calendar year. But you can see here the illustration, January to January, that's easy to see, is 3 years. Well, so is 11/1 to 1/1. That's also 3 years, because it's a calendar year, not a 36-month period. All right.
Oh.
So here's a price point. If let's say, Bill and Bob live across the street from each other, Bill picks up the innovative G, Bob grabs the Plan G. Over time, this is the annual difference, assuming a 7% annual rate increase. One of them is going to save $9,000 in this example, because both plans are going to get the same rate increase through the years. So the power of saving your customer money is amazing with this plan. All right, next slide here. Here's something that nobody else is doing. I thought it was kind of cool. We reimburse at 100% everything on the Lifeline Screenings menu. We have had a great relationship for 11 years with the Lifeline Screenings company. This is part of the enhanced benefit, which in Colorado, Nevada, Utah is baked into the current plan. In Arizona, it's part of that enhanced plan rider that comes with the policy, $10 a month currently, right? We'll pay for everything on the Lifeline Screenings menu every year, once a year, for the rest of their lives, as long as Medicare hasn't already covered that test, which makes sense. So if you're wondering, oh my goodness, what's the value of that? Head over to lifelinescreenings.com, pick a zip code, see what's available. All these tests every year, once a year, for the rest of their life. I got to tell you guys, when I was an agent, I met one of the VPs over at the home office a couple of years ago, 2-3 years ago. And I said, hey, Tim, we got Bill running around the country teaching us how to tell our customers how to get the money out of the policy. Go get your annual physicals. Go get your Lifeline Screenings. I hear some agents say, yeah, keep that close to your vest. I hear other agents leading with that. Tim, do we mean it? Which way does this go? And Tim said to me, Tim Reed, that's the VP over our division. He said, George, we absolutely mean it. Think about it. We're an insurance company, right? They're going to get the money out of the policy either at the end of life with catastrophic costs and catastrophic diagnoses, or they can have the money along the way and have a better quality of life. Either way, they're going to get the money. Okay. We would rather they had a better quality of life and got more out of their insurance policy. So tell them to go out there and get their annual physicals. Tell them to go out there and get their Lifeline Screenings. I'm like, oh my goodness, is that an insurance VP that just told me that? In this space, right? So I took the liberty of cities and states where we're talking about today, just to show you a snapshot. I picked a random zip code, and these, this one in Salt Lake City, this one out of Denver, Las Vegas is the backdrop, and then Phoenix. random zip code for the city. And these are the stations where there is a regular route for Lifeline screenings that they do mailers on their own, no cost to you. And they invite 50-year-old plus, whatever their cutoff is, to come get their screenings. And the screenings are life-saving, absolutely life-saving. I mentioned that guy, Bill, a minute ago. He's keeping count of how many people's lives he's saved with our enhanced preventive benefit through the years. Bill's been producing for us for years. When your folks go to lifelinescreenings.com, and it looks like this. This is my zip code, and you can pick a location. You're going to drop down menu, and they can just schedule that test, go get it done, send us the bill. Done.
So who is this Lifeline Screenings? Is this like a nonprofit? Is it a government thing? What is this?
Thank you for asking. Lifeline Screenings is a third-party company that started about 35 years ago. And these are the guys. They do the carotid artery screenings, the aortic aneurysm screenings with ultrasound. They do bone density scans, blood work, what have you. It was started by a medical doctor who lost his brother to carotid artery disease and would have been easily diagnosed with a simple ultrasound. So he started that company 35 years ago. And they used to be the guys, I remember years ago, they were the guys that would pull up in a Mercedes or Sprinter, Nissan Sprinter, and just do the tests inside the truck, right? Now they are all over the country. You almost can't find a zip code where you won't have multiple locations and multiple times at a regular route through that area, where they now set up in fitness centers, churches, gyms, VFW halls. And I can promise you, some, if not most of your current customers either have heard of or have had a Lifeline Screenings exam. I actually went and got it done because I just wanted to experience it so that I could tell my customers, well, it was like this, But that's who the Lifeline Screenings company is. We have been with them, like I said, for 11 years. A great relationship with these guys. Again, part of that enhanced preventive care.
Okay.
All right, next. Here's something the other guys aren't paying for. This is also an elective that requires no doctor's referral. You can get this done once a year, and we'll pay for it 100%, which makes it free. Thermal imaging. Now, this is a very interesting imaging modality that is used more frequently now. I'm a retired biomed. I used to work on medical equipment for a living, so I got to kind of stay in my lane here. But for the consumer today and for our purposes, this imaging is an imaging modality that is used alongside and with other imaging modalities. The other imaging modalities, X-ray to include CT, ultrasound, of course, those really look inside the body. The thermal imaging does kind of a heat map, which is what you see here. Although it does penetrate a little bit deep, it is not for an intracavity imaging at all. And it can help diagnose many things. Thyroid screening, for example, intestinal inflammation, even hormone imbalances. I don't know how they do this with a heat map, but we've been paying for these at 100% for years. It can help diagnose vein thrombosis, circulation, et cetera. The number one that I hear is breast cancer screening. This test for thermal imaging is, and this is part of what Bill Lee, that same guy that's keeping count of how many people's lives he's changed, the ability for thermal imaging and the fineness at which it can read blood close to the surface. The resolution of that is so fine that they're able to detect, in his wife's experience in particular, several times, the growth that probably shouldn't have been there, that other imaging modalities just couldn't find. And so because we as a company find thermal imaging to be super helpful in terms of preventive care, it's something that we pay for at 100% reimbursement, just like our Lifeline screenings. We pay for that by reimbursement at 100%, once a year, every year for the rest of their life. All right. Any questions about either the Lifeline screenings guys or thermal imaging?
Nothing written.
All right, we're going to move on. The next slide, Mr. George. Ooh, I like this slide. So I was up against one of my competitors a couple of years ago, And this guy really, he put me through the paces, right? We've had customers like that. After a 6th or 7th phone call, he's not even eligible for policy for a couple of months, right? When I met him, and I caught him on the phone one day, and I just said, Mike, I just got to thank you. I've never had anybody put me in the gym and work me this hard. I appreciate all the questions you have. You're making me a better agent. And he said, cool, but you're up against this guy, and you're like $35 a month higher. Walk me through that, because I really like you. I want you to be my agent. I like your company. I want to buy your stuff, but help me understand that $35. I said, oh, Mike, how long do you have, right? I said, the other guys, they don't pay for annual physicals like we do. And that's got to be worth about $25 a month minimum, right? So right there, I closed the gap. Then we reimburse Lifeline screenings. I know they don't. That's got to be worth $10 a month, at least, maybe 15. I said, Mike, you got thermal imaging? He goes, I'm starting to see it. I said, right. So when I'm training my team, I hope people close that gap a little bit, because the other guys may be building their policy with a base plan with bolt-on riders, and they're not comparing a comprehensive plan that has all that stuff built into it. If they're missing a rider, well, there's your $25, Mike, and that's what happened. So I try to help people see there is a monthly value to this. Can we close the gap of $60? Probably not, right? We're salespeople. We're not magicians. But to help people understand, as we help them understand Medicare, the mechanics of how this healthcare works, we kind of got to help them understand how the money moves, in particular this plan, these plans from Physicians Mutual, because it's very benefits rich. And we know that we can afford the reasonable risk and be generous in the marketplace. We just have to help them understand the value and position in front of them so they can understand the value. But wait, there's more. Arizona has that black tic tac. We will not go through these next several slides as thoroughly as we have. So I'm keeping an eye on the time here. I want to be respectful of everyone's time. Know that in Arizona, part of that enhanced preventive care does include the Silver and Fit membership at a gym of their choice. There's over 14,000 fitness centers across the country. Next slide.
By the way, George, I noticed that we do have an Arizona producer on here. So,
oh well, thank you for letting me know. So among the fitness centers, you can see the density of the map here. There's quite a bit. We went with these guys instead of the other guys, and we like them as a company. And among the many reasons is that when you have the fitness benefit as part of your policy in Texas, by the way, and Wisconsin, where I live, it is the insurance commissioner required us to bake it into the policy. It is not a rider where we are. But out in the states, in Arizona in particular, other states that have this black tic tac on that map, it is a rider, by the way, this enhanced care, and with it, Silver and Fit. But name brand gyms, right? Curves, LA Fitness, Snap Fitness, YMCA, right? This isn't Bob's Gym that nobody's heard of. This is a huge fitness center network that we pay for as part of your policy. Okay. Now, if somebody says, oh, and I actually had a call from an agent the other day. Well, I've got somebody who is a super fit person, and they want to know, well, what about an upgrade? Well, we'll pay for the base policy, and if they want to upgrade, that is between your person and the gym, respecting the gym's relationship with Silver and Fit, right? That's not our gig. We'll pay for the base policy, but they can upgrade. And again, these are going to be with name brand gymnasium, name brand gyms like Club Pilates, again, the YMCA, and so on. Part of the basic baked in or basic fitness membership is they get one home fitness kit per year. And these are not knockoff. I'm not sure where they built them. We're talking fitness, Fitbits wearable like Garmin, right? Fitbit itself. Talking about Pilates here. These are high quality home fitness kits that they get once a year, every year, non-returnable. Got to say that they asked us to be sure to put that out there. But every year they can get one fitness kit per year. Part of the Silver and Fit membership does include healthy aging coaching, to include so much, right? Live coaching to change health behaviors and improve overall health, or continue with what people have been doing is they've maybe taken care of themselves very well through many years. And it includes all these different categories here. And what you would expect from a coaching class: accountability, helps with knowledge base. It's interactive because you have relationships with people in that space. And take it up a notch, you can join the well-being club. And allows you to have the independence that you want. And just this fitness plan grows with someone as they grow into their retirement years, whichever direction that they're headed in. And they have lots of benefits that are available in 2024. Social determinants of health, where they're bringing in more knowledge into the Silver and Fit company, virtual events, and then of course a growing workout library. And we do have Silver and Fit rep that we'll handle some of the basic questions, but mostly we kind of count on our Silver and Fit partners to carry do the heavy lifting, no pun intended. All right. As everyone maybe knows, discounts are set by the state and the percents are set by the carrier. So when you look at the states here, these are roommate states. So folks are married regardless of their spouse's age or domestic partner, or they live with someone 60 years old or older. Not more than 3 people, right? That would be a group home. We don't give a discount to that. We do give a 10% household discount to folks in the states where you guys are looking at. And so here's a couple more. They're just listed here. And let's talk about the $5, not a percent, $5 discount per month for automatic bank draft. If they're going to write a check and we got a Chase paper, then it's going to be $5 more on their premium. But otherwise, it's $5 discount. Nearly all of our customers are on automatic bank draft. And then we do have a 10% non-tobacco discount for open enrollment, even if they smoke. We just want to give them that 10% non-tobacco discount. Next, let's talk about birthday rule states. Since Nevada, I had an agent kind of collide into an issue with the state of Nevada and us. Obviously, all carriers appointed in any birthday rule state are subject to the rule. We've been around a long time. We're very familiar with the birthday rules. But the one thing that is different that many agents aren't aware of is that the timing of submitting an app is not necessarily defined by the rule. In the state of Nevada, for example, we accept policies on the first of the month of the birthday month. One of our competitors accepts it the month before. Now, when a carrier has to accept the application is not subject to the rule. So just heads up. And this agent actually had such confidence in the birthday rule and her experience with it. She told her customer to cancel the policy, and it was a nightmare. Fortunately, the person didn't have a claim, and so neither company had to kind of sort that out. But just beware that the timing of submitting an app is not necessarily defined by the rule. Just saying. Because you guys are talking about Nevada, and it was the state of Nevada that this poor agent and I were sorting through that stuff. All right, that's it on the MedSup. Yay, any questions?
No questions written down here.
All right, well, thank you.
George, thank you very much. We sure appreciate your time. And, you know, I've been hearing that Medicare supplement carriers are trying to compete with the Medicare Advantage benefits. And I think you guys have done a creative job of looking at it that way. So we sure appreciate your time.